Good morning. Today is Tuesday, July 5th, 2016. Pre-market shows us negative 103, 1.5 million in volumes. We had a topping pattern at the end of trading on Friday. We had a negative pattern on the 5, kind of a retest, poor man's divergence on the 15. The 60 had already turned. Now with this drop over here, we're going to form immediate upside support on the 5 and 1. I knew that this was possible, but not tradable. So let's see how the daily and weekly charts, respectively, plot on opening. We had on Friday the plot of the monthly and quarterly charts, and they obviously did not plot lower because of this huge manipulated upside of almost $12. But what's interesting also is that the monthly did not really plot up, nor the quarterly. So even this level of manipulation cannot change the technical picture clearly established by the super large time frames here. So all we need is another drop over here, and this thing can get accelerated. What I am beginning to think, since the market is so heavily manipulated by the Federal Reserve and the bank cartels, is that we have another drop and immediately stock buybacks come in and we prop the market back up again, and we enter into this never-ending zigzagging of the price, which brings me to this particular situation. I'm going to pull up the weekly here and I'm going to give you a maximized view of it. Here's evidence of the manipulation. Take a look at how the weekly chart has been topping even since 2007 around these levels. And throughout this entire time, and we're talking years, for crying out loud, years. We're talking, if you take a look at the pop-up there on the upper left screen, the lower panel on the third line, it says 9.1 years or 473 bars. This is a weekly chart, so that's 473 weeks or 9.1 years, where technically speaking, we are topping at the same levels, yet the market continues to go up and up and up and up in a very unhealthy fashion. If we go and bring up a monthly, you can see how the price from the 2007 tops has gone up $53 or about 34%. I was going to say 50%, that would be incredible. But this is not normal. This is a very unhealthy looking chart. And the problem with such an unhealthy looking chart is that the crash is much more severe. Take a look at the topping over here and the negative technicals. If you've been following along my videos, I have said many times, and this conclusion, I arrived to it because of thousands of hours of analysis. Technical divergences are nothing more than pullbacks on established trend. See, when the monthly tops out over here, take a look at how we top out here, yet the price continues to go up. But technically, we are short every time the price goes up, and we flatten and we turn down, and the price takes a little dip, and then it's manipulated and it goes back up again. But take a look at the length of travel of the upside here versus the indicator, very flat. And so we're flattening, topping out, and then we finally turn. And on this turn, we stay down. Now take a look at how the trend technically is established on the turn here. The price drops, then manipulation comes back in. We top out. But see how this is a pullback on trend. Then we top out, then you have another drop, and then you have another pullback. But take a look at how technically we are not coming back up. We're staying here. Every time we top out here, when the lower time frames, and I'm talking about weekly and daily charts, they turn in the direction of this. See, at this particular point, this is a negative divergence. When those charts turn in the direction of this established trend, see the trend is established here at the turn, and you have this series of pullbacks with the MACD blue line already below the signal. So you had already the crossover into weakness. We are below it. You have a retest. The lower time frames turn in the direction of this weakness, and then you have another price drop. Now, this should have been the drop. It was done. We were well on our way. But no. These guys come in, they manipulate the market, and they bring it back up again. So we're in the middle of this third retest. And take a look at where our technicals are. See what I mean? What do you think is going to happen next? Another drop. Now this drop remains to be seen what happens. Is it going to collapse? Are they going to let it collapse? Or are they going to come in and manipulate it again? I think they're going to manipulate it. Yeah, I think they are going to manipulate it. The price will come back down, and then we're going to have another upside. Now, interestingly enough, when the price comes back down, the manipulation has created some anomalous patterns. And what I mean by that is, you see, when you bring in the technicals in an unnatural way, in this case on the weekly, on the upcoming drop, that is undoubtedly going to happen soon. What you're going to have on the drop over here is the immediate formation of a pattern of support, depending on what the technicals do here. If the technicals follow the price pretty hardcore, then we're going to form an upside pressure pattern in passing, or a divergence in passing. Like this. Let me illustrate. See, when the 2-hour chart pulled its technicals up like this, on the drop here, when we were here, take a look at the poise of this drop. But at this particular point, this is an upside divergence. Now, the momentum of the drop made this thing just continue on this direction, get past previously established bottoms, and turn this thing. See, take a look at how the technicals continue, and over here we cross below previously established bottoms, and so we enter into upside pressure pattern rather than upside divergence. An upside pressure pattern is nothing more than a comparison on price length, either on drop or surges, versus indicator, and it's clearly visible how the technicals over here are much shorter than the actual price, hence upside pressure pattern territory. And so in the upcoming drop, we can have a similar picture, but at a weekly level. It remains to be seen how this drop is handled by the market. Are they going to allow the market to do what it naturally wants to do, which is to bring the price down to real levels, not bubble territory levels, which is exactly where we're at. So let's see what happens. So with today's drop, which if we go back over here, we are at $1.02, 1.8 million. I sustained that. I wouldn't have felt confident in trading something like this because we still have a 2 and 4 hour charts that are very, very poised to the upside, and also the daily. So let me allow the open to happen, and I'll come back and give you the picture. So here's the pre-market, and then here's the open. Look at that, 60 continues in its descent. Then we have the pullback. I'm looking at the pullback over here on trend, which goes exactly in sync with what I was talking about. So after you have this pullback on trend, then this thing ends in here. You have the ability to forecast the drop. So that gives you the 21950s, which we can go and take a look at. And then you have a very iconic 1 minute negative divergence there. Take a look at the direction established by the 5, 15, and then the hourly continues. On another note here, take a look at the 2 hour flattening, and you could say turning. There's going to be a pullback on this, so there's going to be a definite opportunity coming up over here. That 4 is still pointing up. And let's go take a look at the daily and weekly charts, respectively. I'll show you here the closing on Friday. Put your eyeball on the weekly chart here. It advances 5 points, but it plots sideways. And the daily advances from -35 to -18. That's a significant move to the upside. But it is showing signs of weakening, because take a look at how it plots a little sideways. I mean, it's still going up for sure, and I would have to say that this technical topping on the hourly is one of those 1-2 patterns. In other words, the trend establishes itself here, and we're either going to have a pullback on trend, that's scenario number 1, hence the name of the pattern, 1-2. So the first scenario is trend established to the downside here with an upcoming pullback and the formation of a poor man's divergence. Scenario number 1. Scenario number 2, trend established here and pullback on trend, mind you, creating either a price retest for a well-established negative divergence to undermine the continuity to the upside of the daily, or even a price pullback that eclipses previously established stops and we just form a very well-established divergence. So this remains to be seen. Nevertheless, we are seeing the weakening coming in here as we are right now in poor man's divergence territory, or a pullback on trend, a very, very dramatic, heavily manipulated pullback on trend. With that said, last but not least, let me show you the progression of the weekly time lapse. So here's the Friday closing, and this is relevant because July 1st happened to be on that Friday. And that's why we took a picture of this, because the monthly plots, see, I'm going to go to previous month, the previous, not month, but the previous Monday. We were already in trend territory to the downside here after the pullback. Then the manipulation comes in and they pull the price back. So this is the way this thing looked like on Friday. And here's the opening. Take a look at the monthly. Take a look at how the monthly ever so slightly moves in the direction that it wants to. With just a tiny little move, the negative power or pressure already established by this chart immediately comes into full force, and that's just a tiny little dollar drop over here. Imagine what's going to happen with the direction of this technical picture as we drop more. Now that's the monthly. Now take a look at the quarterly. Also advances in the direction that it has already established, which is down. We're looking at a 15-year-old divergence where the previous technicals were established back in 2000. Okay. And this is the weekly. The weekly brought a little momentum to the upside here, so it goes up, but it's flattening. It's painting the turning here. So there's the opening. We can go and revisit over here. We're at minus 112 after a little bit of a pullback here with 7 million in volumes, and we are currently on July week 2s for the options expiration for this week. Now, as I was saying earlier, we have a divergence in here. The price starts moving in the direction of this negative divergence, and then we have a pullback of trend. This is something that I need to really warm up to, because I know this pattern technically, but I have a hard time trusting it. One of the things that makes trading right now difficult, especially to the downside, is the understanding that we are in the middle of a heavily manipulated market. And so the market's tendency to the upside is huge. It's always present because these banksters come in and they don't allow the market to behave naturally. And so I am already predisposed to more upside. I'm afraid of trading against this manipulated trend. So anyway, if we ignore that and we follow the technical picture that we have learned to trust over several years, we come up with, and we have a nice iconic negative minute divergence. That should give you enough confidence to trade the 209.50s. That's another thing that I needed to really think about, okay? Let me put this thing here for you. We established a technical top on the hourly. Check. Right? And this technical top on the hourly is an instrument that is needed to create a pattern on the hourly. We need to create a divergence on the hourly so that we can turn this daily, because we have so much poise to the upside, and that gives you the ability to create a technical top here, pull the technicals back, long, fighting the uptrend, and then you have a continuation to either create a poor man's divergence or a well-established divergence, as I explained a few minutes ago. And so, given that understanding that the technicals on the hourly need to pull back to create room for either a poor man's divergence or an actual established divergence, because this is a classic 1-2 pattern. I explained this a few minutes ago. The one scenario, the first scenario, is the establishment of the downtrend here with the upcoming pullback. There's going to be a pullback, and you can take that to the bank. Okay, there's going to be a pullback over here. Now, the pullback could be just a pullback on trend that does not eclipse previously established tops on the price, and so it creates a poor man's divergence. A poor man's divergence is really a divergence kind of like this one, where the retest doesn't touch previously established tops. I'm talking about negative divergences here, or eclipses. So it's a divergence of sorts. It's a pullback on trend, and I call that a poor man's divergence. So we're going to have a pullback over here, and scenario number one is it's just a pullback on trend, and so it creates a poor man's divergence. That's scenario number one. Scenario number two, we have a pullback that actually pulls all the way back over here and either retests previously established tops or eclipses them, creating a well-established negative divergence or downside divergence. One of the two is going to play out. But understanding that this is a 1-2 pattern, then that means that we are establishing trend, and this is a tiny little bit of a pullback. Again, this is one of those 1-2 patterns at a lower scale. I should have had the confirmation by this analysis that we were going to develop lower. That gives me an entry on the 209.50 puts, which I'm going to show you here after the interval coming up, which is going to give us the plot of the 15. Here we can see it happen in real time. The 15 is at 7, and it moved from 7 positive to -2, so it advances lower. I didn't see the plot of the 5, but it clearly plotted lower. Take a look at how the price is continuing its trek to the downside. See, the continuity of the 5 over here would have kept me in, even though we are pulling back on trend over here. We're definitely starting to see the establishment of a technical bottoming on the 1, especially here with this drop over here. We have an upside pressure pattern that's getting established pretty good here. Now the 15, even though we plotted down, it's short on the drop. This is an upside pressure pattern. But we have direction and momentum happening right now. I'm going to show you here shortly what happened on the 219.50s. I got that chart ready. But we got the top of the hour coming in. And remember I said in here we were establishing a pretty entrenched upside pressure pattern. Take a look at how it was able then to create a technical bottom. Now the 1 minute is pulling back technically long than what the price is doing. The 5 minute still has a very entrenched poise, but it's interesting to see how the 15 is rather short on the drop, and so is the hourly. It's going to be interesting to see here on the top of the hour where this 15 plots, but this is upside pressure in here, and the 5 minute is a little short against what the price is doing. So let me take a picture of the upcoming interval. So here's 9:55 and here's 10 o'clock. 15 plots lower, but it's definitely short against what the price did. The hourly continues its descent from 127 to 112. The 5 minute is starting to level out over here. Take a look at how the price is pulling back. There on the 1. And obviously we have the context in here, but I'll show you the context here. This is the opening. And with the continuous drop, take a look at the daily shrinks a little bit. And the weekly also shrinks. And it's uptick over here, comes down 5 points. And we know what happened to the 60 and 15 respectively. With that said, now let me show you what happened on the 209.50 July week 2s. The entry will be somewhere in this area, 357, just before the market closing. Right? Here it is, 357. The 209.50 puts, July week 2s, were 93 cents. They started tracking up right here. Then this area here is the additional 15 minutes of the ETFs. So this is from 4 to 4:15. This is officially the close that day. Okay, and then on opening, you are at 40%. Now you are at 40% on opening, which is right there. No reason to get out. This is just the beginning of the drop. You gotta establish a technical bottom on the one, and the one has an extreme amount of direction. It's short on the drop for sure, but you gotta let this thing establish itself. Here's the context, and there's the next 5 minutes. Take a look at how the 1 minute continues. The 5 minute continues. Take a look at the 5 from -5 to -13, and 15 from 9 to 8. So at 9:35, you are already in the middle of there's the little pullback, which gives you this hesitation here, and then you have the continuation right there. Then 9:40, you hit some stability and pullback over here, which is this little pullback, and then you have a continuation by 9:45, which takes us right around here at 70%. Right, and this is where I said, take a look at this upside pressure pattern, and by then you start pulling back. This is 9:55 or so. By 9:47, you are at 93%. See, at this point, 950, between 950 and 955, you have 954, 953. You have this bottom right there, which gives you this right here by 952. So by 947, 950, really, you reach this bottom over here, right? This one right here, 949 or whatever, 47, gives you $1.80 on those options, or 93%. And now we see what's going on with the price of these options as the price underneath starts to pull back. Now the 5 minute has not turned, nor the 15. Now with this picture, you could say to yourself, this is one of those 1-2 patterns where we establish the trend to the upside here, and then we make a poor man's divergence or a divergence, scenario number 2. From the look of these charts, it looks like we can eclipse previously established bottoms. But imagine this, you already entered a position and you are in a situation where you basically doubled your money. Do you need to be so persistent on this? When we analyzed this earlier and said, you know, this thing is going to stabilize, and then, because this is one of those 1-2 patterns, you have the drop, and then you have to have a pullback, either reform a poor man's divergence, which if that happens over here, these options are going to collapse because the price is going to go up. Or scenario number 2 on a 1-2 pattern like this is you actually come back up and retest all the way. If that happens, these options are going to go even below previously established bottoms over here. So I think, given the picture here and understanding the possibility of a poor man's divergence or actual retest over here, and we get out, and then the technicals are short over here, this thing found its bottoms in here, it looks like. So that's my analysis for this morning. We can go and take a look at VXX, for instance. There's VXX. I've been looking at this thing forever and a day, understanding we need to create a pattern over here. We're retesting almost all the way down. I said we need something like this. Well, in order to create something like this, you need to first bottom it out, bring the technicals, and then you have a continuation, which is exactly what I think is going to happen. There's going to be a great opportunity coming up. Let's take a look at the Qs on the 1, 5, 15, 16. Take a look at how the Qs also over here formed a poor man's divergence, but the trend had been established. This is a pullback on trend, and then you have the continuation. Very iconic entry also here on the 1. Over here, the 108s would have been the choice. And here at the end, take a look at how the price, like on SPY, is coming right back down. So we established the technical bottom, we pull back, and now we're in full-fledged continuation. In this case, it's forming an actual divergence. But take a look at the drop over here. It makes me want to take a look at SPY. There's the continuation, which gives you the continuation on the actual options here at a $1.83 already, or a 96%, and it just exploded to a $1.90, which will take you into double your money territory. $1.90. You see, there's the divergence established, and the price bounces right back up. Now we have direction over here, for sure. Now let's go back to Qs and see the larger picture. See, take a look at this thing here. This definitely looks like a pullback on trend. The trend being down, manipulated pullback, and then the continuation. If you go to the super large time frames, take a look at this monthly pointing down. The trend has been established. This is a pullback on trend. It's starting to resolve down. This topping over here means negative on the daily here. How about a 2-day chart? See the negative divergence in here? See what I'm talking about? We are most decisively going to come back down. We just need to turn this daily back to the downside. Let's take a look at Russell. Russell had this interesting topping on the 1, poor man's divergence on the 5, pullback on established trend on the 15, the lower time frame stopped feeding the pullback, and you have the continuation. The 60 was already pointing down. This was easy. I messed up. That's okay. This little study that you are seeing here smooths out my own understanding. These exercises that you're seeing here, if anybody is following along with these videos, shows you exactly how I have been able to, over the years, smooth out my understanding and chip away the rough edges as I create my magnum opus sculpture. This is very good. This is really caressing the pullbacks on trend and how to enter the continuations, and making a case for the context being that we establish a technical topping here against the daily so that we can create a pattern. And again, it's one of those 1-2 patterns where you either have a poor man's divergence, which is a pullback on trend, or you have a full-fledged continuation, which would establish a retest for a nice divergence, scenario number 2. Either or, that understanding, it gives you the continuation over here so that the technicals on the hourly can continue to pull back as we create a pattern. Moving on, diamonds, very similar to SPY. Very, very similar to SPY. Here's the retest over here, creating an established divergence. I have to come over here to SPY to take a picture on the interval, which I can show you the 15. The 15 advances lower, but it's starting to curve towards stability in here. Take a look at the 5-minute. Is basically technically bottoming because of this upside divergence on the 1. And these guys are starting to stabilize there. Yeah, so it looks exactly like SPY, basically. How about FAS? Similar stuff. Pullback on trend starting to resolve to the downside. It could be also looking at FAS. You know, we hit the channel over here, which at some point in my past videos I said that regression says that it needs to come all the way over here, and it did. Then you have this pattern come in. Could it be that this thing just dropped? It could be, but I sustain that there's going to be a pullback, and that pullback is going to give us an entry here. It is definitely going to give us an entry. Take a look at how the market entire is negative. Ooh, Freeport McMoran getting decimated over here. Let me see. Very nasty drop. I was looking at this. I was looking at this daily over here. How about oil? Remember I've been saying that oil is going to crash again? Because we already ended the pullback. The pullback over here got a little out of whack because we had an enormous amount of support, even from the monthly. Interestingly enough, that quarterly is flattening. But you know what I think? It's nothing more than a very well-established pullback. We just don't have fuel to the upside on these charts. These charts are negative, and this thing is starting to lose momentum. I think it's very possible that this thing just collapses. The only thing going for this thing is that it has outside pressure patterns forming here on the daily, which form support underneath, which can't just balance out the price for a while in this area. But this picture is not very good looking for upside. As a matter of fact, I see a drop coming in. UNG still in the middle of the pullback. Take a look at how this thing is running out of steam. Take a look at this negative divergence and how the price gets slammed down. It looks like it's hitting the channel regression over here, and we're hitting support over here. It's possible that we still come back up over here, but we are now on a very weakened and undermined daily chart. So over here you can see all the red coming in about Apple. And a pullback on trend. It's coming down. Take a look at the massive amount of negative pressure coming in on the 15 until you finally turn that hourly around. Take a look at this guy's technical picture. The only thing I see over here is that this monthly is a little long against what the price is doing, and there's cavitation on the price over here, which brings about patterns of support. This is support. This is a chart that is supporting more upside, but it's a little weak at the end, so it can still drop. We have a monthly with extreme direction and quarterly. This is not good. It takes a lot of effort to turn this thing around. So things are not looking good for these guys long term right now, as a matter of fact. And then we go into the green spectrum, which is VXX, obviously. We saw that earlier. And then TLT, GDX, and silver. These guys rallied still a little bit. It looks like their rally is starting to run out of steam. This is a downside pressure pattern. We have extreme direction on the daily, but we have a downside pressure pattern here on the weekly coming in. I think it's time for a pullback. See, if you take a look at the channel regression, we're on the top of the channel. We're hitting it. There's still a little bit of room left. Not much though. And then we can see a regression. Extreme poise on this monthly. But a regression from where we're at to 27 is not out of the question. It wouldn't surprise me to see a regression somewhere in this area. So that's that. And then silver stocks also going up. Technical picture here. That monthly really poised to the upside. But again, we have a downside pressure pattern here. Very interesting. So I'll leave you with these thoughts. Take a look at how this thing came up over here and scooped the price and technically bottom the 5. Isn't that interesting? And here's those options. Take a look at this. We had the 1 minute pull long. I mean, it's the same story repeats again. This was the pattern, 1-2 pattern. It actually had a divergence form. Then the divergence establishes a trend, and then you have a series of pullbacks on trend that are poor man's divergences, if you will, until this thing can no longer sustain itself. It runs out of steam. Then you have a continuation. Now, this continuation in the larger scheme over here is a poor man's divergence on the 5. And this 5 minute wants to technically bottom this 15. Will it be able to do that? Remains to be seen. We are in brink of the top of the hour here. Quick glance at how this thing topped out at 107%, and then down here. So there it is. Here's the transition from 10:55 to 11 on the 5 minute time lapse. The 15 still plots lower. the hourly advances. The 5-minute wants to push the price back up. And here's a look at the 60-minute from 10 to 11. The daily shrinks a tiny little bit. We know what happened to the 60 and 15. Take a look at how we had a continuation eclipsing previously established bottoms. Take a look at how these options actually made it to 203. And would it have been worth it to stay over here? Made it to 118%. But take a look at all this pain that you would have had to endure for over an hour, whereas the previous established exit either here or here, probably here, is not that far away from this. Is this a little better? Yes, but you add an amazing amount of risk, understanding that the context over here calls for a continuation. Then again, take a look at the channel regression over here. We are hitting a regression on trend right here. The daily has not turned, and so that gives you a continuation to establish a pattern on the hourly. Is it going to happen right now? Remains to be seen, but this 5-minute pattern is definitely looking like it's establishing a technical bottom on the 15. Now, it's a little too narrow on the 5 and too wide on the 1. It's a 3-minute divergence. See what I mean? 3-minute divergence. So we passed the 2 o'clock and take a look at these options. Came all the way back up to 212 for 127%. After establishing this moment here at 100%, somewhere in this area, why would you want to make it all the way over here and you return after? See, each one of these segments here is an hour. 10 to 11 to noon to 1 to 2. So even before reaching 10, or let's say that you make it all the way over here on the establishment of that very iconic 1-minute pattern that was right here, right? Let's say that you make it to 10, 12 or so. At 107%, you are at 127 4 hours later. Is that worth it? I would have to say no. The thing is that you're fighting now over here, time premium decay, and now you have an established 5-minute divergence. Makes me want to take a look at, say, at 10. It's a little shallow. It's a nice 5-minute divergence within context. Take a look at how the technicals of the hourly have matured lower, yet the daily hasn't turned. I think look at the pullback over here. It's kind of like a poor man's divergence. We're going to have a continuation to the upside. I can call on the 214 just to show you. So we're on full-blown pullback. We're going to have a continuation. These patterns over here, these charts, the 4 and daily, are still pointing up. And we are starting to lose momentum to the downside, and now we have an established pattern. Take a look at what happens in here. It already moved the price from 207.75 to above 208.5. That's over 30 cents. Just a quick update. We passed the 215 interval. Take a look at this. Take a look at the 15. It actually plots up, not by much. We are in the middle of 60, pointing down pretty hardcore. But this pattern should be able to introduce some weakness. What I don't like is that we're not too far away from the channel regression here. Maybe, I would be surprised if we made it to 219. We have extreme direction here. And the 15 turned off. Could be. So anyway. 4 o'clock. Market has closed. We had this pattern here, and then this very iconic pattern in here. This thing changes. The 1 turns, and you have a small regression. And from there, the price, I mean, take a look at this thing. It moved from 207.75 or thereabouts to 208.80. That is $1 upside. $1.08. Here's a quick look at the 209.50 puts that we were studying. I did a bunch of markings that when I refresh here, they have disappeared. they're all gone. This upside over here gave us the 118, and then by 146, shy of 2 o'clock, we get this particular pattern. And this thing actually made it to 215, which is right there, 131%, just shy of 2 o'clock at 146. Yeah, it's this part over here. So anyway, that's that. And then I want to show you this particular move to the upside over here. I saw this bottoming and I said, it has potential to move the price, but I made a conscientious decision, an educated decision, and I said, no, I'm not going to go against that hourly, even though I know that the price needs to go back up to create a negative divergence on the 60 to undermine the continuity or pullback and direction of this daily chart so that we can continue the long-term trend, which is down. When this thing comes to pass, we're going to have ourselves a real opportunity. However, I do want to document how following along on the 5-minute, you can actually trade this direction, and we're going to see how much the 208 calls made. So here's the time lapse. It's 120. We've been bottoming on the 5 over here, undermining the 15. We pull the technicals of the hourly, like we said. So take a look at the one over here turns. Then the price comes right back down. We have a nice little drop there. The 5-minute hooks to the downside. At this point, you're looking at the loss of momentum on the 1 and wait for it to turn. There's the turn. There's a little pullback. This would construe the moment of a possible entry over here. 155 on, it's 207.76. The 208 calls. The 208 calls at 155. There's the context of the hourly. There's the daily and weekly. Take a look at the explosion there. Boom, it moves nicely. The context was clean on the 5-minute, right? And then you're looking just for the loss of momentum on this thing. There's the 1-minute. Creates a little pullback and continuation, so we mark, and then you have a continuation here. There's very good direction on the 5. There's the 15. We saw this, then we top out, and then the price comes right back down over here. Very dangerous over here after the pullback and continuation at around 215. That's pretty much it. You probably get out on this one at, I would say, at 216 or 217, right around here. When the price starts coming back over here, you hit the channel regression, the 60 is pointing down, done. That would have been here, which I haven't even represented, because as I'm doing this study, I want to go back, but this one really jumps off the screen. So what's the entry? The entry would be, you wait for it to turn, and then you wait for a little pullback on trend. There's the turn, so not yet. Pullback on trend, there's your little pattern at 155. Here's the return. At 217, I put an exclamation mark instead of the 1. 26.92%. If we go back over here, that's the moment of entry, 155. See how the price of the options pulls back over here? Forms a nice little upside divergence there. That's it. The 5 is ready, the context is good, the 15 is undermined. I just chose to not participate on this based on the context, which is the 60 is extremely poised to the downside, so I'm a little apprehensive about that. Nevertheless, I understand that this thing has the potential of pulling the price back. So that's the entry, right there, and then you let this thing move. There's 2 o'clock. Take a look at the hourly, still plots down. The 15 is flat. The 5-minute turn, the 1-minute explodes to the upside. So by 2 o'clock, we're already over here from 104 to 112. I didn't want to put percentage returns over here because that's not anywhere near the exit over here. This thing is beginning to unravel. So there it is. There's the context. By 205, take a look at the price, right? The 5-minute turns. We have a little loss of momentum over here, a little regression. 5 minutes pointing up, 15 is in the brink of turning. Next interval is the 15-minute, which is interesting because it shows us the plot of the 15. There it is. We're on the upside. And at this point, 215, you're watching this like a hawk because there could be a regression. So on the very next plot, you have this, and this is 220. That's why I said these are 1 minute lines or bars. You take out 2 or 3, that takes you to 216, 17, 18, 17, 26, 92%, 27% return right there. And then you have the regression right here. Because again, you're looking at this hourly. So this runs out of steam, it hits a channel regression dictated by the hourly poison direction. So you have a price retest on the go. On the downside over here, you have a pullback, hitting a channel, continuation, continuation. This is a very iconic pattern again. And let me tell you what, I put this understanding together basically today. I've been caressing this idea for the last few videos, the last few days of trading. Take a look at the one. At this particular point, you're just looking for the one to end its down cycle. It's suffered already pullbacks and continuations on its down cycle. So you want it to turn. There. It turns by 255, but I want a little regression. There's the regression. That regression gives me the entry. This little regression. So that regression is at 254. That would be my entry on the 208 calls again. 254, 255, right there. This is your little regression. We established the trend here. This is, again, one of those 1-2 patterns. One is, this is the establishment of the uptrend with a poor man's divergence or a full-blown price retest. We had that one here, but not here. You just have a little pullback. The trend has been established. Take a look at the level of move. Almost from 207.70 to 207.95. That's almost 25 cents. It's not 25 exactly because we are just above 207.70. So we're like at 207.72 if I have to guess, right? And so there it is. Price goes up. This is 3 o'clock. I'm going to show you the context right here, right? But take a look at the 5 minute, the 15. What happens to the 15 at 3 o'clock? Boom, more upside. 5 minute turns. We're on the upside, and so you're in this thing now at 255, 254, right? And you're in it. 310. There's a regression. Continuation. Flattening of the one with the poor man's pattern. Then this thing explodes to the upside. 325, 320. You were over here. 26.13%. I messed up my markings in here, but that's 26% return. What I'm trying to see is if I would have stayed here. Pullback, topping on the one. Shoot, I don't know, it's a tough one. At 310, I want to say 305. You're over here from 111 to 123. It's not much. From 111 to 123. 10%, you're just basically making money for the house. So, would I have stayed? I would have to say yes, based on the quality of the divergence and the fact that the 15 is on the upside. This thing pulls back and then continues. Zigzags around over here a little bit. Then you have your upside, 335. Take a look at the 5 minute, the 15. Take a look at how at 330, the 15 plots higher. And you have a nice explosion to the upside at 335. Takes it to 26%. Meandering. Continuation. Over here, you establish kind of like a technical top there on the 1. Extreme direction on the 5. 15. Pullback, continuation. At this particular point here at 345, 350, that 1 minute starts to be suspicious. We have direction though over here, which gives you the ability to pull back on the 1 and then have a continuation, which I cannot show you here, but take a look at how it happened in the last 15 minutes of trading of the ETF or exchange traded funds. But at 345, right here, you have that moment. Yeah, around 345, 346. takes you right here to 35%. So that's two little trades back to back. Not that I would have traded them, I didn't. I made an educated decision not to do so, but this is a good exercise on letting the 1 minute turn, little pullback, boom, over here, letting it turn, little pullback, boom. That's it. That is what happened. This is where we can go and compare it with Qs. Did Qs have a similar situation? The answer is yes. Take a look at how the 1 minute also turns here, and then it has a poor man's divergence on SPY. It's a full-blown retest. Over here, on this second entry, you have a little pullback on trend. How about on VXX? I mean on Russell. There's your pattern of the 5. There's the turn of the 1, little pullback, and then this thing explodes. Very interesting indeed. Diamonds, same thing here. Established direction, pullback. However, here it is. This is your pullback. Direction has been established. In both instances, you have the pattern. How about on VXX? On VXX, well, we were looking at bottoming over here. You have a topping over here. Then this is your poor man's divergence, and the price drops. This is the divergence being created right now on VXX to undermine this daily, just like we did here. We just don't have a nicely established divergence like here on 15 that put this thing into motion. This is when you had the Brexit right there. From Thursday to Friday. On Friday, that's the Brexit, and that's Black Friday, really. Do we have a pattern of upside over here? Not yet. I mean, overall, yes, but not a catalyst right here. We had that on VXX here. Overall, I need a catalyst at the end. We're in the throes of making it happen. So there you go, then SPY. Just a picture on the larger time frames of all of these monsters. So all of them were forming negative hourly divergences. And diamonds. I changed this thing over here on diamonds here. Same thing. How about financials? Same thing. We had also the little pattern in here. Isn't that interesting? So that's all I have for today. Let's not dilly-dally over here. We're waiting for this pattern. It could happen tomorrow. We're going to stay on point. Let's see what happens. It's going to be already, can't believe it, Wednesday, July the 6th. Until then.